What's up, crypto hackers? Welcome back to another episode of Hack Crypto, where we hack our cryptocurrency, NFT, blockchain, and metaverse education. If you guys are brand new here and that sounds awesome to you, slap a like, be subscribed with notifications on. It's just that little notification bell so you get notified when we drop new videos here on the channel. 25 crypto exchanges in the last 30 days were reported to have gone out of business. And that can sound crazy and chaotic. That is a high number, I will say. But this is a very experimental space. And I always try to let everybody know that nothing's in stone, guys. Not even life itself. Like literally, just all of this is about experimental technology. People are making huge speculative billion-dollar bets on things. And a lot of times that just doesn't work out. Many times it does over the long haul, but most of the time it is going to explode in various different formats. EOS was a great example, but a lot of things happen. And what's exciting is that we don't know the outcome, and being part of this, the journey, is what's to be enjoyed. Now in this episode, I'm going to be going over what to do in the midst of a full-blown collapse. And for everybody that's thinking that Bitcoin and crypto is dead, Bitcoin has been called dead hundreds, if not thousands of times over the last decade. And this is part of a cycle that happens every 4 years. Usually it is very well traced to the halving, which means half the amount of Bitcoin are rewarded to miners for supporting the network. And this is just part of the game here. Now, as someone that has a background in economics, I try to look at the whole scope of a market in terms of the supply and the demand. And right now what's happening is a lot of the demand, aka retail investors and many institutional investors, have gotten wrecked. So therefore supply has decreased. People are less willing to buy in because they're scared. There's a lot of fear, uncertainty, and doubt flying around in the industry, and a lot of people just saying, hey, everything's collapsed, it's over, it's going to be over with forever. But that is just not true. If you follow what the developers are building all across the entire ecosystem, when you see things like Cardano deploying really exciting things on their testnet, when you see Ethereum really working hard to move into proof of stake, and all of the developers that are just deploying dApps every single day on every single blockchain out there. There is a ton of momentum happening behind the scenes. It's not called a bear market per se by many people in this space that have been here for a while. It is called a build market. A lot less of the frothy noise of the people really just shilling everything that they can possibly get out there to make a quick buck and move on to the next thing. Right now, the people who are getting recognition are well deserved of that recognition. They're people that are down in the trenches building. When they release something, the people that are listening and also on the side of the building, it's just a beautiful combination. There's more eyeballs that should be watching and reading all the different white papers and things that are rolling out for the research and development of blockchain technology. So it's very exciting for me as a builder of my business, Sandstorm, and all the builders that I know, even if they've lost seven figures, and I know many personally that have, with this whole Luna fiasco that happened of the collapse of the stablecoin and Celsius going down and Voyager going bankrupt. I'm going to break this video into a couple different parts here. First, I want to start with who to trust as a centralized exchange authority. And this is something that a lot of people have asked me. Tons of people DM me over the last month saying, hey, who can we actually trust? Now that BlockFi got a little shaky, got acquired by FTX, now that Celsius went down and so many people got kind of vacuumed into Alex's machine there, and they froze withdrawals, so everybody realized like, oh wow, my funds actually aren't mine, they're just numbers on a screen. This is crazy. I need to go back to the roots of my keys, my coins, not my keys, not my coins, and just go back to the basics. So starting with who you can trust. Now, obviously you can never trust anybody 100%, but I like to go after the billionaires, the people that have started or are running businesses in this space that have billions in liquid wealth, and they are literally well known for that. They aren't going to let their business go down without kicking and screaming. Now, that seems to be a little bit of a controversial thing to say. Recently, a lot of people have reached out to me like, oh, what about decentralized exchanges? What about Uniswap? What about QuickSwap? All these different kind of DEXs. And to respond to that, of course, that's amazing, but you are susceptible to self-custodying and hacks and a lot of these sort of unstable currencies that exist on those swapping platforms and those decentralized exchanges. So I will once again say that there is a filter to get onto these centralized exchanges, and there is a quality control that goes on these centralized exchanges, similar to a bank. If something goes wrong, you have a support ticket that you can reach out to and contact them. So I recommend beginners start with a centralized exchange. I've done that since 2013 when I got into this space. And around 2014, 2015, I started recommending Coinbase because of the design. It was a beautiful interface. And I always recommend blockchain.com or blockchain.info back then was a way that you could really see what was going on chain, on the Bitcoin blockchain. And it was a really exciting kind of difference where you had your Coinbase where people could go sync their bank account, buy things like Bitcoin back then. And then you had your blockchain.info and blockchainnow.com where you could go and self-custody all of similar aspects that Coinbase did, but it was all self-custody. So I recommend Coinbase as number one, publicly traded, a lot of FUD going around about them right now, but fully publicly traded business, which is extremely difficult to go through from a regulatory perspective for those new to how that works. It is just a nightmare and a half to go public as a company, let alone a crypto company that's custodying a bunch of digital assets like that. Brian Armstrong is a billionaire, and rightfully so. He created something that is brought in millions of people into this space and will continue to do that. So I'm a big fan of Coinbase, despite what everybody's going to tell you, despite the FUD that's going around right now and them like taking funds from people and all this just kind of FUD spraying around. They're a business. They are regulated highly. They are generating cash. Of course, the price is going to go up and down of their stock value of the crypto assets they have in custody. But ultimately, easy interface. It's secure, there's a support system, and they've been around for a long time. So they are familiar with these ups and downs of the bear and bull. Next up after Coinbase, I recommend Gemini. Now, also none of this is financial advice. I'm not giving any sort of numbers or anything like that, just talking about the actual exchanges. So you have your Gemini exchange, where that is run by the Winklevoss twins. I guess plural is Winklevi. There's Winklevoss. But ultimately, they are billionaires and they are running this exchange. It's been around for a very long time. They started slowly with Bitcoin and they've moved into a ton of different tokens, including Sandbox and some of the really exciting tokens out there. Uniswap that I mentioned earlier is on there, a ton of different tokens. So in order to get listed there, there's a huge process for tokens to go through. They're vetted and everything like that. So those are the first two that are very key and what I usually recommend for beginners because they have easy tools, they have a good support system, and you can get started pretty easily. You can sync bank accounts, everything like that. As a central exchange, they are the heavy hitters, in my opinion. Next up, the kind of coming in with the sledgehammer into this space has been FTX by Sam Bankman-Fried. He's been like the fanboy of this space because he's donating all of his wealth to charity. A lot of people like him. I enjoy him. I've read a lot about him, watched interviews with him. Very smart individual. And he's done a great job of just barreling into this space over the last few years and just taking it by storm. He recently acquired BlockFi. So what FTX is doing that I actually really, really like is that they are allowing businesses to open up accounts on there. And that to me is such an empowering move for anybody that's building in this space. Going to FTX and opening up an FTX US account as a business is relatively straightforward. I've mentioned this many times on Around the Blockchain on the BitBoy Crypto channel. And the reason that I'm including FTX into it not only is because they're a massive exchange and they have surpassed many, many of the other exchanges in volume, but they have done such a good job with building business accounts. They have brought in a lot of companies into the space, a lot of institutions use them, and they've just done a relatively good job of coming into the space. So I will say once again, he falls into the billionaire category. He's worth like over $10 billion, I think. And that, once again, buckets him into that category there. We have Brian Armstrong, billionaire, runs Coinbase. You have the Winklevoss twins, billionaires, run Gemini. You have Sam Bankman-Fried, billionaire, runs FTX. Next up, we have custodying. After you're familiar with this, I've said this hundreds of times on the channel. I mentioned it briefly, not your keys, not your coin. This is something that I've always preached since day one when I learned what the power of self-custody in crypto meant. And having studied economics and how these systems are operating with, proof of stake especially, if you're holding these coins on a hardware wallet, you are sovereign. Like, you are holding on to your wealth. And there's nothing more empowering than knowing that you are in full control. I think personally, I've probably set up a dozen people's ledgers for them in their kitchens, all over the country, friends, family. Once you've kind of gone down parts of the rabbit hole, you start feeling a little bit more comfortable on these centralized exchanges. You can really wire that money out or transfer that money out into these ledger wallets once you're comfortable. Now, that can take someone a day, that can take somebody 6 months or a year. There's no rush. Take your time. Ledger has a really cool system called Ledger Live that you can use on your desktop as well as your mobile device. It syncs your accounts and you can see everything right there. You can also swap and transact on there very easily. There are a lot of really cool features on there, so definitely recommend checking that out. And next up, we have Trezor. Trezor came around shortly, I believe, after the Ledger movement happened, but it is a similar device that is a hardware device. You can lose the hardware device, but you need to have that private key as a stored, somewhere safely, somewhere separate from the hardware device. And the last bonus piece here that I want to mention to everybody watching this video is during bear markets, it's very important to have a allocation that you are mentally prepared to have and hold for a long period of time. This is a big hurdle that I had to go through multiple cycles ago, where I realized, like, oh man, I'm checking this price all the time. And I talked to a bunch of trader friends of mine that trade daily, and they said, if you're checking the price, 5, 10, 20 times a day on your phone or on your computer, on CoinMarketCap, whatever, that means you don't have the right allocation. You're over invested in something. If you're checking it that much, you shouldn't be doing that. You should have the right amount sitting there in an asset class, whether it's real estate or crypto or stocks or whatever it is. You should have the right amount in there so that you can live your life. You can literally continue enjoying life and being a great investor because you know that what you have there is the right amount. And it's not just drawing you in constantly, and you're not obsessing over it, and you're not emotionally attached to it beyond what you should be and what's healthy. So that really helped me transform everything that I was doing because I was checking it all the time. In 2017, especially, it got crazy, and I was really upset after the kind of up and down. And these corrections teach you something. They really teach you something. I wanted to leave that at the end for a bonus piece there, because everybody that's listening to this through the end is going to go through the motions of this, regardless of who you are, where you are in your life. It's impossible not to the first couple of ups and downs, because you kind of look retroactively and say, well, what could I have done better? And this is just a classic way of your mind working against you there, and that's part of the market dynamic here. And that is it for this video. I hope you guys like it. All the links will be in the description below. Hang in there. There's a lot of craziness in the market right now, and just hodl. Just know that the people who make out the best in all of these bull and bear markets are literally the builders and the hodlers. People that get wrecked the most are the traders. The people who think that they can out-trade and outperform just literally sitting still and getting these gains. So that is it for this episode. Slap a like if you like this type of content, and I will see you on the next episode here on Hack Crypto.